why you soon could be paying thousands more a year in mortgage payments. Inflation is rising. When inflation rises, one strategy to get it under control is to raise central bank interest rates. And in the UK, that would be the Bank of England's base rate. But why is this bad for your mortgage payments? Well, the Bank of England has increased its base rate from 0.25% to 2.25% in September 2022, with the aim of curbing inflation. However, when the Bank of England increases their base rate, this also makes borrowing more expensive. This means that when the base rate increases, so do your mortgage payments. So, what does this all look like for a mortgage? At the beginning of 2022, the Bank of England base rate was 0.25%. This meant that a typical 5-year fixed mortgage deal had around a 2 to 3% interest rate. Fast forward to November 2022, and the Bank of England base rate is now 2.25%, with a typical 5-year fixed mortgage deal coming in at around 5.5%. This increase as a percentage sounds minimal, but let's have a look at how this could impact your monthly and yearly mortgage repayments. For this example, we'll assume you're a first-time buyer. The average house price just hit £292,000, which means a first-time buyer with a 10% deposit would have a mortgage of £263,000. If you was getting a mortgage in January 2022, a typical 5-year fixed mortgage deal would have been around 2% interest. This would mean a monthly repayment of £1,115 a month over a 25-year period. But at today's rates, that same mortgage would now cost £1,615 a month, meaning an increase of £500 a month or £6,000 a year. It's still the same house, the same deposit, and the same length on the loan. All that's changed is that Bank of England base rate, which then impacts the rates that lenders provide to customers. This isn't just a problem for first-time buyers. In 2023, hundreds of thousands of mortgage deals are due to run out, meaning that these people will be on the market looking for a new mortgage deal. These new interest rates will mean that people that are remortgaging are going to see their bills increase significantly. As a general rule of thumb is that for every 1% mortgage rates increase, you will be expected to pay roughly £50 more a month for every £100,000 of mortgage debt. These increases in mortgage repayments, along with energy bills, fuel, and food price increases, could be the final straw for people struggling in a cost of living crisis.